Hello guys. Today let's talk about some stock indexes that are you might interested when you are trying to invest. I will mainly talk about two stock markets. One is United States and one is China, based on my research. So first of all, let's talk about Chinese stock exchange. There are two biggest exchange market in China. One is Shanghai Stock Exchange and the other one is Shenzhen Stock Exchange. As we can know, those indexes that start from CSI it stand for Shanghai and Shenzhen, which is a comprehensive index, and those start from SSE shows Shanghai Stock Exchange, and SEZE shows Shenzhen Stock Exchange information. So first of all, CSI 300 index. It is a market cap weighted index. It shows the performance of top 300 stocks, largest and most liquid stocks that are traded on Shanghai Stock Exchange and the Shenzhen Stock Exchange. So it can reflect the trend of entire stock market of China. In my opinion, it is important to know the index calculation because it can make you more sensitive about the change of the index based on how it was calculated. So, for the CSI 300 index, it is calculated by the current adjusted market capitalization of constituents divided by constant, a divisor, and times by 1,000. 1,000 is the base point. It doesn't matter a lot. We don't need to know this. Here is a explanation right here. The adjusted market capitalization always means price of the stock times the number of shares. And the divisor is the base day price times the base day number of shares. You just say constant, we don't need to care. The bar chart here tells us how the CSI 300 index is made of. It is consist mostly three part: financials, consumer staples, and industrials. So um, when this index change a lot, you might want to check if you are investing in a financial company, the stock price might change bigger than the rest of the companies. Okay, now CSI 100 index. This should be very easy to understand because CSI 100 index shows the largest 100 stocks from CSI 300. It reflects a group of the most influential companies in Chinese stock exchange market. It has the same calculation as CSI 300 index. Here is the latest 1 year trending of CSI 100 index. As what we could notice, here is the about time when COVID-19 just found, and here the COVID-19 was getting more severe, and here is the time that Chinese has done with the COVID-19 and people back to work and the companies are opening up. Stock price was climbing from here and all the way to today. Another reason that makes the index skyrocketing from here is because of how the CSI 100 is made up. So let's see the bar chart here. The biggest part is about 32% is made of financial companies. And here the blue one is the consumer staples. And here is the consumer discretionary. Just after companies opening up, these things couldn't really easy to get back to normal. That could be one reason makes the index climb up so fast. Okay, now SSE 180 index. Like what I mentioned, SSE stand for Shanghai Stock Exchange. Um, SSE 180 shows the best, largest 180 companies' stock performance listed in Shanghai Stock Exchange. And the index calculation is the same as before. It's based on the market capitalization. Here is the sector breakdown of SSEY80 constituents. Almost 44% is from financial companies, and 15% is from consumer staples companies, and here is from industrials. This is why, just like what I mentioned, make it so smooth and fast climbing after people are coming back to work. SSE 50 index is selected from SSEY 80. The chart is basically looking the same as the SSEY 80. Now let's move to SEZ 100 index, Shenzhen Stock Exchange. It is the best 100 company listed in Shenzhen Stock Exchanges. So the calculation is also the Pash-weighted formula, but this one is a little bit different because this one uses the sum of all the capitalization divided by the closing price of previous day times current share of constituents. Here is the trend of Shenzhen stock exchanges. Let's see here this point when the CNI 1000 only goes up to 400%. The Shenzhen 100 index goes up almost 500, and here when it's dropping, the Shenzhen stock exchange is mostly above the CNI 1000. This could show that people actually has more confidence in Shenzhen stock exchanges market. Okay, now let's move to US stock indexes. Those are some important indexes that investors must know. So let's start with Dow Jones Industrial Average. It shows 30 largest companies' performance in the United States. Some famous companies are Apple, American Express, Boeing, Coca-Cola, McDonald's. The index calculation is a bit different. It is the sum of the price of each stock adds up together and divided by the number of stocks. 30. Okay, now let's look up the trading right here. It is the latest 1 year's trading. As we can see here, March 23rd is the day that the stock market has experienced the trough. I remember that US has triggered circuit breaker for several times, I guess like 3 or 4 times. That shows investors has no confidence on the government in respect to the control of the COVID-19. Okay, now SP 500 is Standard and Poor's 500. It measures the stock performance of 500 largest company listed on stock exchanges in the United States. It's just like CSI 300 index. Here are some famous companies like Adobe, Comcast, Verizon, the Disney company, the Intel. On the calculation is also the market capitalization weighted index is calculated by the market capitalization and divided by a constant divisor. Here again, the trading of the latest 1 year on the March 23rd, it has experienced a trough. Now here is the Nasdaq Composite. It is the index of stock and the similar securities that are listed on the stock market. Here are some famous companies like Nvidia, Netflix, eBay, and Microsoft. On the calculation is also the market capitalization weighted index is calculated by all the closing price times shares divided by a constant divisor. Here again, on the March 23rd, United States has experienced a trough. Here what we can see is that from that day on, the stock market has returned back to normal and climbing up. That was partially because of the Federal Reserve's monetary expansionary policy and one part of Trump's policy to reopen the state in any way. And it has shown many signs of international cooperation in regard to the COVID-19. Okay, finally, the Russell 3000 index. This one is a little bit different. This one measures the entire US stock market and it has a very small index number. Here is the same day that on March 23rd jumped to a 12th. So based on these information, do we find any differences between US stock market indexes and the Chinese stock indexes? My answer is no. I don't see any big differences between, and they have very similar mechanism. The index calculation are mostly market capitalization weighted, except the Dow Jones Industrial Average that this one we should go with the name is the sum of the price of each stock divided by the number of stock. So it is the average price number of each stock. Do they show different insight? My answer is no. The only thing I could found is that US stock is actually more stable than Chinese stock. Let's go back to see Nasdaq. So before a big jump right here, we could see that the trending was pretty smooth. Even is after is pretty smooth. The SP 500 smooth after smooth. The Dow Jones smooth. If we go to look Chinese stock market, we can see here is the Shenzhen 100 index. So here is the performance of the latest 10 years. We could see here is a big climb, big job, and even here is a 1 year of SSE 50. It's like jump down, climbing up, jump down, climbing up. Here, jump down, climbing up. It's very obvious that US stock is more stable than Chinese stock. So we could conclude that Chinese stock market is more risky than US stock market. But the risky could be both good and bad. The good is that people who are really sensitive about price change and they actually know how to invest, they could buy low and sell high to win a decent money of arbitrage. And the bad thing is when people make a bad decision or wrong decision, they could lose a lot. So when we do investment, personally, I will just separate a part of my money out of my normal budget to do the investment.